Hi everyone, I'm Laurel Marie Hickey. Welcome to What's Blank Got to Do With It. Today's What's Blank topic, bear markets. So what's bear markets got to do with it? A bear market is a prolonged drop in investment prices, and it generally happens when a broad-based market index is down more than 20% from the recent highs. So in this market environment in 2022, there's a lot of new investors. The last prolonged bear market was in 2008. So if you've been investing for 14 years, you would have had some experience of what it really felt like to be in a prolonged bear market, such as in 2008. In 2020, yes, we had a bear market then as well, but that bear market had a recovery of 4 weeks. It was not a prolonged period of time. So traditionally, a bear market is 289 days. So that's the average over time. And certainly what we saw in 2020 is we had a lot of stimulus come into the market and a lot of new money coming in. People had extra money in their bank accounts from the stimulus. We had a lot of new investors. And so certainly we had a very quick recovery. In 2022, the current bear market that we're in June of 2022, it was announced that indeed we were in a bear market, but that downward trend actually started in January of 2022. So it's really hard to say if this bear market will be longer than 289 days. Sometimes they can be a couple of years long. So what actually happens in a bear market? So let's just imagine a bear. Let's just imagine a bear. He's been out having fun and gallivanting, and now he's tired and he's gonna go into the cave and he's gonna snack on berries and honey, which by the way would be very expensive at this time because of the inflation that we're having. So honey and berries are very expensive. So if that was a consuming bear, he'd be like, oh, he'd have a little bit of a shock value of what his hibernating treats are. But all kidding aside, a bear market is where the bear has gone into the cave and we really do not know how long the bear will be in the cave. We don't know how long, but we do know that it's inevitable the bear will come out of the cave. So if we look at the markets, and we have a really great chart if you want to reach out to us of all of the historical events of investing. If we look at recessions, if we look at interest rate increases, if we look at war events, and it really just shows you the events that happen over time and the recovery of the market over time. So the markets have recovered, the broad-based markets have recovered 100% of the time in our history. So we do know that there will be recovery, but it's hard to know exactly when. Now with a bear market, you're kind of feeling, if you're following the emotional side of things, you're kind of feeling that the party's over. But the party's not over. This is just a natural cycle that we have with the markets. And it's really important to really leave the emotions aside and really work with your trusted advisor talking about risk tolerance. Are you in the right risk tolerance? Have things shifted for you? What was the reason you were investing in the first place? So if we focus on our dreams and desires and how far out in the future that is, it helps to realize that this is really a period of time that we will navigate through, and eventually the situation will correct itself. You know, and as an example for this year, we have high inflation, we have high interest rates, we have geopolitical risk. And so there's reasons why the markets are very volatile. So once there's a remedy, once there's a solution for all of these events, the markets will smooth out over time. But if you make an emotional decision and decide to sell all of your investments, which you really can't time the buying and the selling of, you will miss out on the recovery perhaps. So it's super important to stay invested in the plan that you have chosen, the plan that you've been working towards, and really just work with a trusted advisor to talk about how you're feeling. So with a bear market, you might be feeling that you really have no control over what's happening in the market. And truly, there is not anything you can do. You can't stop a stock from going up. You can't stop a stock from going down. But what you can do is have an awareness and a reminder of why you're investing your money in the first place. If you're investing your money because over the long term you need a certain rate of return to reach your retirement goals, or over the long term you need your money to grow in order for you to reach your goals, really the bear market is a shorter period of time than when your goals are to be met, then sticking with your plan and staying invested always makes sense. You do have control over the risk tolerance you choose. You do have control over the conversations that you have with your trusted advisor and friends and contacts. It is important to communicate if you are feeling nervous about the market. So I hope I've explained a little bit about bear markets in 2022. We're still not through the year yet. We're in close to the last quarter of 2022, so it'll be interesting to see how the rest of the year plays out. If you would like any of our materials that I mentioned in this virtual podcast or historical charts, please reach out to me and I'm happy to share that with you. Until next time, I'm Laurel Marie Hickey.